Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 25th, 2018. I thought I'd take a look at gold today. The ETF, generic ETF is GLD. We have the short, intermediate, and long-term trends point to the upside. Anybody that trades gold knows that it's been heading up since mid-December or so, so it's been a really nice surge to the upside. The technical rating kind of points that out as well, given all the different tools we actually look at, so that's pointed higher. The seasonal tendencies are pointed higher, and I'm going to spend a little bit of time on that just to give some perspective. Other than that, nothing really popped up on the elastic wave or power levels, but we do have something that's going on with the support and resistance. It's just a little bit wide enough that it's not showing up here, but nonetheless I want to at least address it. And then just full disclosure, nothing is really happening up on the pro alerts. Everything for gold across the board is flat. So this is more of a support resistance and Kager analyses that we're going to be going through, along with some of the seasonals. So let's first take a look at a chart here for gold. You can see on this daily bar all the way to the far right that we actually sold off about 0.75%. It came up and is testing this level right here, this signal level. It's a strong 50. We came up to it yesterday, stopped, and had the reversal. That level in question is 1363, we'll call it. Now, if we go back in time and we actually scrunch this up a little bit, what I want to show you is we have a number of resistance levels, all of these magenta lines. A lot of them are quite small, but the major one is the highs that were set back in, say, July of last year. Now, with where we are right now, we have this level right here, this strong 50. There's a little bit of a continuation over here, and then there's this 26 here, and I can't really read the number, but another one that's over here that sort of connect together. And what I want you to see is that the market itself, between the surge yesterday and the retracement down today, that the low side hits this 26. That number is 1339, and then this high right here. So the market is in an energy zone. This is not energy level, which is a different indicator we have. This is an energy zone where the market is ping-ponging back and forth between strong support and strong resistance. So the question is it going to just simply consolidate through and then make a decision? Is it going to break below this level, or is it going to meander back to the upper end and then start to head higher? And I think some of this can be answered if we flip back to the website and we take a look at the seasonal tendencies. First thing is, here's the seasonal top 10. You can see that gold is number 3 in the list, so it's seasonally accurate. And then if we take a look here at just the turning points, we've got two charts that we're going to take a look at. Here's the 5-year chart. This obviously is the seasonal tendencies for gold. And then here is the 10-year chart. So kind of a mixed bag here, but the 10-year chart, which is what we're looking at here, this little black triangle is telling us where we are right now. You can see that the market typically goes up into the early part of March. So we've got the rest of this month and all of February where it's typically quite strong. This is on the 10-year. On the 5-year, it's basically the same thing, but there's a little bit of a retracement, which is where we are right now, and then there's that continuation surge. So the fact that we're hitting this major resistance, this is an early warning signal, perhaps. It's corresponding here with the 5 years, that it could come back down, kind of go into that energy zone, kind of go sideways for a little bit, as I was talking about, and then have the next surge to the upside. So we'll see what does take place, but the fact is that as of right now, when we take a look at all of the different time horizons, specifically for gold, that they all point to the upside and they all go into the early part of March. If we take a look at the 20-year, it also shows the same thing. So when we talk about seasonally accurate time periods, we're talking about, is the market here and now tracking It's 5 year, it's 10 year, it's 15 year, and it's 20 year all together, all independent of one another. And is it actually following? And the answer is yes, it is. And so I think that the seasonal tendencies will actually help us here to remain on the long side, at least as far long side biased, if you will. But do bear in mind that there's probably, at least according to the 5 year, a little bit of a little retracement before we see the next surge. So the other thing I was going to show to you is this. This is a rolling 12-month CAGR chart, compounded annual growth rate CAGR performance chart, 10-year analyses. And you can see that we've been heading higher, as I mentioned, and that the CAGR, the performance on a rolling period basis, is heading higher. It's not as high as what we saw in '09 and another period in 11, but we are seeing that the market is pretty strong relative to its recent past. And the thing I wanted to show here is this. This is a comparison. I'm going to just pull up the 10-year, where it's going to compare where the market is relative to its 10-year analyses for the gold market, as well as for the other markets in the sector. So gold, it's kind of hard to see. Let me zoom this in a little bit. Here's gold right here. It's the green bar. GC is gold. You can see that here's normal. And you can see this little diamond here is telling us that we're still in that zone. So we still have, on a 10-year basis, a lot of room to go as far as the peak performance of all rolling period in the past over the 10 years. So the reason I say that is that from a 10-year basis, 5 years showing a little bit different. 5 years telling us that we're at the higher element right now. But on a 10-year basis, we still have room for it to potentially go as high as, I'm not saying it will, but that it still has the ability to hit a new high, which would be in the 60% range, as we had back in, I think it was '09, as I was pointing out. So bottom line is that if ever you're interested, what you can do is just pull up our CAGR analysis and then do a comparison between the market, in this case gold, and other sectors, and be able to see how it relates to the S&P and any other market within the sector. And we do this for both a 10-year, which I just showed, and we also do it for a 5-year. So bottom line is that I thought you might find that of interest, saying that from a 10-year perspective, there's still room to be had if we look at history as a guideline. So I guess bottom line is the things that you're going to want to watch is the fact that we retraced a little bit and then we're in that little zone. Just really keep a close eye on gold, where it could get ping pong back and forth between that support and resistance level as I was talking about, and then we should theoretically, after that, if the seasonals are going to be accurate as we would anticipate, then we do expect another surge to the upside. As of right now, I didn't bring it up, but I'll just tell you that our systems just hedged itself today. So we're effectively hedged. We have a long system and a short system simultaneously, different time frames, different trading styles, and so we're just going to have to, that's essentially what it's telling us. We're just going to have to wait and see how things are going to play out. We will, or I should say, the systems will react when necessary. But for right now, given the fact that we've fallen back into this energy zone, I'm doing air quotes here, that you probably want to just be cautious, watch over the market, but do anticipate that there's an opportunity for some long positions to be had when the systems deem it worthy. And from that standpoint, we'll see us run out. We can unwind the short and add to our longs and get long the market, assuming that we get some type of continued breakout to the upside. Otherwise, we're just simply hedged and obviously in wait mode. So the other thing I was going to mention just real quick here is that I'm going to be on a program tomorrow. And if you're interested, it's going to be the TD America Network. I'll be on tomorrow morning, and I think we start at 8 o'clock in the morning Eastern Standard Time. So we'll be talking about the equity markets and just kind of going through some of those markets. So if you're interested, just go to tdamericanetwork.com tomorrow at 8 o'clock, and you can be introduced to myself again further with a couple of hosts where we're going to be talking about the equity markets. So thanks very much for watching, and we'll talk to you tomorrow.